And on Friday, the market got CrowdStrike. And it caused the largest IT outage in history, okay? This is no small thing. CrowdStrike services 62 of the top 100 companies in the US. Now, CrowdStrike has been putting out hot fixes, but the important thing to note is that most of these fixes cannot be done with just a software update, okay? It has to be done in person. You have to do a restart, you have to delete the bad files. All these PCs are blue screening. People can't use them at all. It hit the airports, it hit the banks, the brokerages, the grocery stores. Your local bed and breakfast down the street has no access to their system. And this is pretty big. Even though it's only affecting Windows computers and not Macs and Linux, most people are using Windows. Now, I said on Twitter that I was using this opportunity to buy the crowd dip. Now, I do want to make an important note that on Discord, I told people I was buying really small. And we saw that, coming in the morning and buying that, the stock did have some recovery. It did bounce back some. We saw some consolidation. However, I knew that buying the dip, the market has trained us to buy these dips, right? But I knew that this could likely have some more sell-offs. The one thing that I was uncertain of was, would insurance actually cover this? Insurance for these big companies will cover things like cyber attacks, they'll cover natural disasters, but would they actually cover this if the company pushed out this bad code? And remember, there's a lot of people, there's a whole team of people who have to approve this, okay? They usually test it in-house and then they push it out. They still caused the largest IT blackout in history. The lawsuits will be massive and coming from all directions, okay? The selling is likely not done here for crowd. So if you're looking for an easy put play, you probably could buy with some time and some duration on this stock and look for a further dip to buy some. And I will buy that dip, okay? This is the number one cybersecurity company. Cybersecurity is needed more than ever. And as this dips further, I will buy more to shove into my long term. Although in the trading account, I think this is going to go down further, okay? And use those lawsuits as the catalyst. And then once they come out, I'm going to buy more. Now, even though this is a big deal, it's not the biggest deal. And you know exactly what I'm talking about. This new mic I got. I'm giving it a shot. We'll see how much I like it. I don't have to be as up close to it as the Shure SM7B. And obviously, this isn't what you guys want to hear about, right? Although I will fix the echo in the room in the future. But Biden has dropped out of the race. Kamala is now taking over, and this is going to give some uncertainty to the market. Now, she's doing horrible in the polls. Absolutely horrible. Probably the second most hated VP ever, according to the polls. Trump is looking at this, and he's mighty happy, okay? Republicans are rejoicing, Democrats are pulling out their hair, and all I care about is what does this mean for the market? And this spells uncertainty. Now, last week, I told Discord members early into the week, Biden's going to resign by this weekend. That happened, although I've been saying that for much, much longer, and TikTok's been fighting with me. I win again, TikTok, suck it. You guys suck. Every comment you leave makes me want to rip out my hair. Now, well, QQQ, we can see we're starting to print to the downside, but we see on the futures we actually already got to the print to the downside, okay? And these prints to the downside can lead to trends that last a few weeks, okay? So keep that in mind, that we're already seeing that retracement. When we look at SPY's an interesting one, okay? My bullish scenario is still at 600. My bearish scenario is now 482. This could play out either way from the technicals, okay? This could be a fifth wave completed. If we look at the daily, we can see this a little bit more clearly. Let me go ahead and expand this so we can see this and kind of take a look at this. So as you can see, I have maybe this being a potential fourth wave and the fifth wave to the upside. And that's because this fifth wave is so truncated. Okay, fifth waves usually only that truncated if the third wave is an abnormal extension and if the first wave is also truncated. Okay, usually it mimics one another. This first wave is a very long extension, and then the fifth wave is so small and stubby it doesn't look right to me. I remember Elliott wave's more of an art than a science, right? So this could be the completion of the fifth wave, or and then we get an A, B, C down. We get this bearish scenario bringing us to around 480. Or we could still see that this fifth wave is rather, the subwave structure within the fifth wave is rather giving us a fourth wave. So this test at around 547 will be huge, and I think that will give confirmation. Now, to fully be in bear mode, I want to see 534 get tested. If a fourth wave breaks into the structure of the first wave, it is breakdown in the structure. That means that this isn't a 5-wave pattern, which means that this is likely the completion of the fifth wave, and we're looking for an ABC down, right? Very simple, okay? Very simple with the Elliott wave analysis there, okay? That's the easy confirmations we want to look for. So that's what I'm watching for on the indexes, and it will be huge, okay? Right now, I'm playing with like 50-50 if I come in and I try to take a position here. I don't want that. As a trader, I want the 60-40. I want the 7-30. I want the 90-10, the 90% chance to play out, okay? So I told Discord members early in the week, I'm sizing down, I'm taking less trades, I'm waiting for more confirmations so that I can come in here and I can play with more confidence in where I think the market is headed. So that's what I'm waiting for right now. This week should give us a nice test. We have a bunch of earnings reports. We have some more economic data. We're going to hear about Kamala's VP pick, and the market should be able to sort out some of the chaos that we're seeing right now. Now, tech could still have major drawback. There's lots of things that look interesting there. Those I've spoken about on the Discord. I can't give you everything, but the one thing that I will talk about is Tesla. Now, this is really interesting price action from Tesla, and it's leaving, I think, a lot of people confused. There's a lot of disagreements. I've had a lot of Twitter X spaces where people are debating back and forth on what this looks like. Some people are saying that this is a fourth wave that has already bottomed and we're going to go higher. And okay, quick thing we need to worry about from the fundamental side for my big investment. For those of you who don't know, I am abnormally sized in Tesla. Tesla is a large majority of my entire investment account. Okay, I see Tesla as the thing to buy right now in this market. I am fully allocated. I got fully allocated pretty much during this part, came back in during this part, bought some more, caught the whole third wave. I'm up huge, right? I'm up huge. I currently have puts to protect my position into this earnings. Why? Because the catalysts I'm looking for likely are going to play out until 2025 at a minimum. And therefore, I'm looking at what expectations are built into this earnings, and I'm saying I don't think it's likely they're going to deliver, and so I'm looking for the retracement to the downside. Now, if we were going to use Elliott wave analysis, we would say, oh, okay, the second wave is this big complex wave, right? 1, 2, 3, and then 4 should be a simple wave. This should be 4, right? Is what some people are saying. Now, if we actually look at the Fibonacci's here from top to bottom, we have to bring that from the top of the third wave to the bottom of the second wave, and we haven't even hit a 618. Now, it doesn't have to go to 618, but we're stuck in this kind of middle ground, which is very unclean, which means that this is either wrong or that we're going to come touch 225. Now, the other scenario, if we're wrong, is that this is an ABC. So if it's an ABC, we want to see, the total equal 1. So I could bring this up right here, and 1 would bring us to 227 to the downside, okay? Now, what makes this a bit more complex is if that happens, that means this isn't a 5-wave pattern, or could not be a 5-wave pattern. But if we look at the weekly on Tesla, this is still really strong. If we look at the monthly on Tesla, we just got a monthly candle, the TTM, printing to the upside. What does that mean? It means that Tesla's probably going to go on a parabolic run. So in the short term, I'm going to have some protection. I'm going to wait for the clarification. An easy one, if you don't like Elliott wave analysis, look at this wedge that we have right here. If we go to the 4-hour, we can see 1, 2, 3 tests to the downside, 1, 2, 3 tests to the upside. It looks like yeah, it looks a lot better on the 1-hour. The 4-hour looked like it was messy. Okay, yeah, the 1-hour, 1, 2, 3 tests, 1, 2, 3 tests on this wedge. So just look out for a breakout on the wedge if you want to play it in the short term. And the long term, though, what I also am now looking at is like we clearly have a wave 1. Oh, if we go further back, let's go further back. If we go further back here, we have also a wave 1, 2 right here. And hold up. This is over a multi-year time frame, right? 2023 was basically a wave 1, and then halfway through 2023 into 2024 was a wave 2. That wave 3 takes you all the way to 800, okay, into 2025. $800, $865. We'll call it 860. 860 in 2025 is a potential for Tesla way more than I originally anticipated, right? My goal is that I'm at about 500 by 2025. And maybe this wave 3 actually plays out to like the end of the year of 2025. Who knows? But I'm looking at this stock to give me 5-10x. And lots of people, even on the 5-10x video, were like, you're right, but your expectations are probably a bit too high. No, they're not. Okay? If Tesla delivers on everything they say, you're going to be greatly underestimating how much of society they dominate. Absolutely dominates, okay? And you're there on the technicals. So this short-term price action for option trading, that's what you want to watch. On the long term, you sit pretty, you wait for the actual catalyst, right? Wait for the actual catalyst. I don't think this thing's going to retrace back into my entry price. And if it does, then I'll start to get worried. If Tesla breaks like 160, that's when I'll start to say, okay, a mistake might have been made. I might be missing something. I need to reevaluate. What's the state of Optimus? What's the state of the robo-taxi? Are my catalysts actually broken? Or are people just talking about how this is just an EV company and blah, 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 blah. And it's just all narrative again, because that's what this stock loves to do. That's what these people love to do. They love to use the sentiment bias of how the price action is to justify, whether or not it's a good company, right? You have to look past that. You have to look at the fundamentals. You also have to recognize that fundamentals only align with stocks over multi-year time frames, which as a trader, it's why I don't talk about it a lot on these videos, okay? The fundamentals are great. You can do all the fundamental analysis you want. You're gonna miss all the swings of the market. You're not gonna understand sentiment. And that's why the marriage of technicals and fundamentals is why I beat most of these people on YouTube, most of the people on X. I'm one of the best, baby. So join the crew, subscribe to the channel. You want to join the community, check out the link down in the bio and you can join in there. And that's going to be it. God bless. See you next week.